Alibaba announced their earnings before the market opened today, and I have a fresh set of financials to take a look at to evaluate this company. It's a company where I own stock, and I've been an investor for a little over a year. I can evaluate the company and see if I want to buy more shares, hold, or sell my shares. I'll share that with you at the end of this video. Alibaba is a lot like Amazon here in the United States. It provides e-commerce in predominantly China. It also has a new model where it connects manufacturers in China with other companies or customers in other parts of the world, namely the United States. It's a unique, interesting model where a respective company here in the US can get connected with a company in China that can become their manufacturing partner. That's a pretty good idea. Alibaba also has Alipay, which is a payment platform that has a lot of potential. And they also have a cloud business that resembles AWS. Nowhere near as big as AWS, but it resembles it. So overall, I think it's a pretty good idea for me to have a stock or two in China, since China is a fast growing economy where they continue to really become bigger and bigger, and having an investment there is a good idea long term for me. So let me take a look at the fundamentals, go through their financials, and value the company again to get to a good decision on this stock. Alibaba is a $188 billion company, and it's somewhat stayed around the same value for some time. Not too long ago, a couple years ago, it was valued far higher. Its shares were trading up around $300 per share. Now they're down to $79 per share. I think a big part of it is there's a lot of tension between the US and China, and investors in the US are probably shy from investing in China, a little bit concerned, a little bit scared, and it's kept the stock price down. Looking at the fundamentals of Alibaba, their revenue is $130 billion. So you're paying about 1.5 times revenue for the company. Their PE is 18, which isn't too bad, and forward PE is really low at 9.26. They pay a small dividend, and analysts really like the company. They have a strong buy with a discount of 35%. Over the past year, the stock has gone down 11%. Year to date, it's up 4.5%. And for the past month, it's up 2.82%. On the announcement of their earnings, the stock really hasn't done anything today. It's pretty much flat. So that's interesting. The earnings I thought were fairly decent. They grew their top line revenue by mid-single digits, and their cash flow did go down, which was concerning. Profitability also came down a bit. Their cloud business is doing well, which is a very good bright spot for the company. 15 analysts cover Alibaba, and they provide a very strong buy on the stock, showing that they believe collectively that the stock is discounted by 35%. They're using earnings per share as the principal valuation method, and earnings per share, and this is in the Chinese currency, you'll need to multiply times 0.14 to get to US dollars, is good, and it's going to get better next year and in 2026. I'll use those numbers when I put it into my valuation model. So where do I value Alibaba? How much do I think each share is worth? I get there by looking at their free cash flows and discounting the free cash flows to today's value. I also get there by looking at earnings per share and valuing the company using earnings per share. Now, overall, I think the blended discount on the stock is 50%. That's a pretty good discount on this company. I took the free cash flows I expect from the company, and I have a forecast of those free cash flows. I have a growth rate of 5% in years 2, 3, and 4 for cash flows. And my starting point on cash flows is the trailing 12 months, but only 80% of that, because their current quarter had a drop in cash flows, which is a concern, and I want to really temper down my expectation there. Looking at terminal value, it's going to grow at 4%. So you can see that this is a high cash flow generating company. Really good to see. Since it's outside the United States, I'm going to go with a higher discount rate. I've taken a higher risk, so I want a higher return. Based on a 12% discount rate, I get a value, net present value of all those cash flows of $198.7 billion. I'm going to add the cash, which is a lot. That's on the balance sheet, $55.8 billion. And take away debt that they have, and I get to $233 billion of equity value in Alibaba. So it's much higher than their market cap. It provides a 23% discount if we look at free cash flows. Earnings per share, I took their earnings per share, and I'm using an 18 PE. This is a growing company in a industry that I really like, and therefore I'm going to use an 18. I'm going to grow their earnings per share by 5%. So it gets me to a value per share of $162 per share. But their shares are trading for $79.41. So there's a big discount if we look at earnings per share. That's why analysts really like this stock, recommend it, and have a big discount. Now, when I look at the blended value, which I take more weight in that free cash flow method and combine it with earnings per share to get to a 50% discount, which is a fairly high discount on this stock. How desirable is the Alibaba business? Well, I like to put companies in a quadrant that I've created. The green quadrant's the most desirable. Those are companies with a lot of barriers of entry toward their competitors. So they have few competitors. They tend to have really good revenue growth, profitability, and cash flow. Having said that, Alibaba has a lot of those attributes. They're doing business in China. They're the biggest in China. They do have some competitors in China, but they are the biggest. It's like Amazon here in the US. And I put them squarely in the green with a little bit of gray. And that's because they do have some competition, but they are doing some things that are really, really interesting. One of them is their Alipay business, really high potential. The direct to business model of pairing up businesses in the US or other parts of the world and connect them with vendors in China, that's really good too. So overall, it's a strong name. They've done really well. They continue to grow really well. So I've got them mostly in the green, a little bit in the gray. Overall, I think this is a really, really good company. Now, I haven't made any money on Alibaba, which causes me to be careful with this stock. I've got a little over $30,000 invested, and I'm just going to hold my shares in Alibaba. My investment in Alibaba really hasn't done much. I actually lost $104 on my investment. My cost for all the shares that I own has been $31,638, and the value of those shares is $31,534. So overall, it's been a zero appreciating stock. Having said that, I'd like to see this stock really begin to rally. I don't know that there's a lot of tension right now between China and the US. And I think that companies are perceived to be positive coming out of China. So I'm hoping that the stock price begins to rise and get closer to its intrinsic value. In the meantime, I hope Alibaba just keeps doing what they're doing, growing the business, growing their profits, and growing their free cash flows. So that's my video on Alibaba. I hope you found it interesting, and I appreciate you watching. Keep in mind, I'm just an investor. I don't recommend you buy, hold, or sell Alibaba. Thanks again.